Good morning, everyone.
Hello.
केशव एंड अंकिता, आपको भी आना पड़ेगा for the till this wire is fixed. यहाँ पे दूसरा क्लासरूम है क्या? Is it free? खाली तो लग रहा है वहाँ पे कि we can use the
projector.
Good morning, Keshav. Good morning, Ankita.
So, do you have the Wi-Fi password? Wi-Fi का password है आपके पास?
मैं देखता हूँ मुझे I think it is wireless net. Just try that out. HDMI, no? Navigate in this. Okay. HDMI. This is connected. F8. Duplicate. Okay, anyway, it's not working. Okay, good morning once again, everyone. We are going to start our new topic today on time series. Online people, am I audible?
Yes, sir.
Yes, sir.
Okay.
This meeting is being recorded.
Just give me one moment. क्या हुआ इसको यार? US यही है HDMI है this is right.
You are
क्या वो ब्रेक पे देखते हैं स्टार्ट. Is my screen visible to everyone?
Yes, sir.
We also make crash test numbers.
I'm not. Screen is freezing.
All that remains is train. The train tore through the semi-trucks and could drag these for a couple more miles if we wanted to. Rip them. Oh no! What's happening to him? Well, at least he's still attached. He's right.
Okay, so we are going to start with time series analysis. Now, whatever we have done so far in supervised machine learning is based on random data. Okay, the linear regression, we have data which is completely random in nature. Okay, and what were the other things that we had in a linear regression? We had a y variable, which was a number, and then we had features which were a combination of number plus category. Okay, it can either be all numbers or it can be combination of numbers and category. Very rarely we have only categorical data. Okay, this is linear regression. Now, in a time series, now in a time series, we have the data which is time dependent. Now, what is the meaning of a time dependent data? First of all, how do you define time? Then what is time dependency? Then what are the different components of time? Okay, we'll see all these details in time series. Okay, now if you look at the definition time series and linear regression, they are identical. both do the same thing. It is going to predict the value of y, which is a number. Now, the difference between these two is time series is time dependent, whereas the regression, it ignores time. Okay. Otherwise, both these algorithms they do the identical operation of predicting the y. Now, let us see what is the meaning of time. Can you give an example where a data is time dependent?
Kilometers per hour. Travel.
What?
How much do you travel? In 1 hour? Distance traveled. Every 3 hours and maybe points.
Hmm.
Each person and the speed in kilometers per hour.
Where is the time component there? Something that changes with time. That is time series. What changes with time? Day. What?
Sir, can food be option?
Sorry?
Food.
Food.
Yes.
Food what?
Like food degrade. It degrades to with the time. Changes with the time.
Age.
Food. Okay. Okay. I'll take this.
Age.
Age. What is age?
As time increases in the
Anything that you can calculate with respect to time.
Distance traveled. Speed. I mean speed.
No. That is not time. That is a different time.
Okay.
I'm talking of something that changes with every minute, hourly, daily.
Sir, share market.
Share market. Okay. So stock prices.
So climate.
Okay. So stock price is an entity where the price change every minute or every hour. Okay. So if you start the market at 9 o'clock or 10 o'clock, it opens at a certain price. Then every half an hour or 1 hour, it changes. So when it closes at 3 o'clock, you have a closing price. Okay. So during that 5-6 hours of transaction, you see a fluctuation in the rate. So this is called time series data. Where the entity, so what is entity here? The stock price. So the stock price has changed during that 6 hours. So this is 1 day data. Now, if I take the average of that day, okay. So I can have, let's say, I'm starting, this is which month? December. Okay, I'll take the last month's data. So I have November data. So November 1 till November 30th. So I take some random stock, for example, Tata Motors. So Tata Motors on November 1st. What is the average price for that day? Let us say it is 300. Now November 2nd. Let us say it was 301. November 3, it was, let's say, 303.2. November 4, it was, let's say, 296.7. So here we can see that if I'm taking an average transaction price, there is a change every day. Okay, so this is called as a time series data. So when I want to forecast the data for, let us say, December 1st. So December 1st data, the rate or the predicted value is very close to which value? The previous day's value. The previous day is very close to its previous day. So 30th, very close to 29. 29, very close to 28. So this is called as a lag. So lag means how far you want to go to establish the connection between the current value and the previous value. Okay. So in time series, the most important factor to determine the future cost or the future value is how much lag you want to consider. Is the price of tomato today dependent on yesterday's price? Or is it very close to last week's price or very close to last month's price? Okay. So what is the lag that you want to consider? So this lag is the key in time series, which is not there in linear regression. Clearly, basic concept of time series. So now, what are the different components of time? So start from the smallest unit. So we have seconds data. Then minute. Then we have hourly. Okay. Then we have daily. Then weekly. Then we can have fortnightly data. Fortnight means every 15 days. Okay. So fortnight, then we can have monthly data. That, yes, we can have quarterly data. And then we can have yearly data. So these are the different time components that we can have in a time series data. So can you give an example where a second is important or significant? Do we have any such data set where we can have the seconds to be significant?
Example, racing.
F1 racing, but what is changing in that? What are you going to forecast? We need a value to forecast, which depends on time. Death rate every second, probably yes.
Changes in currency.
Every second. Minute wise, you can have, see, second wise, you can probably have network intrusion. Very sensitive things. Okay, where even the seconds are very crucial. Okay, rocket exploration, those kind of very high technical areas where seconds play a crucial role. So you can forecast using seconds. Minute wise, you can have a lot of these things like temperature, stocks, hourly again stocks, then gold price. Okay, GDP is, you can probably have as yearly. Quarterly could be the sales data. Okay, profits. Monthly could be again monthly sales, monthly profit. Fortnight could again be related to business. So depending upon the business, you can have any of these components as time. Now, how do you forecast when you consider time as a factor? Now, in a typical machine learning, what do we have? A data set. Then we split this into train and test. Ideally, 70-30 ratio. Now, what kind of a splitting is this? (70-30) split is, how do you split it? Is it random splitting or sequential splitting, or what kind of splitting is this? Random splitting, you know? So this is random splitting. Then we take the 70% data, we build the model, and using the model, we do the prediction. Correct? This is the overall life cycle. Now, what changes in a time series? The life cycle is quite similar. We have a trained data, we have a test data. We have a 70% here, we have a 30% here. Now, the most important thing is the split. Here the split is, any guess? Online? Time to hai. But how am I going to split the data? The answer is here, the previous slide, based on lag. So how will my split be?
So we have to take the standard lag. If we have second statement, then we have to understand what is the significance lag.
Right, that will come. That is the next part, that which lag is significant. Okay, I'll tell you how to determine that. But now we know lag is important. So what kind of a splitting do you think we should do? Today depends on yesterday. Yesterday depends on day before yesterday. So what kind of a lag is this? What kind of a splitting should we do? उसको क्या वो रैंडम है या क्या है?
It is sequential.
Sequential. Okay, so we have to do a sequential splitting. So training will be the first 70%, and the 71st record will become the test. Okay, so that is the difference between training a model in linear regression versus training a model in time series. Where is my... So here we have, let's say this is my data set. So my first 70% will be the training data, and the remaining will be the test data. Okay, so we have to split it in a sequential way. So if I'm having a monthly data, if I'm starting the date as 1st of Jan, my second observation will be 1st of February, then 1st of March, 1st of May, okay, till 1st of December. Now, if this is my training data, what is going to be the test data? Let us say this is 2021 and this is 2021.
2022 January.
Correct. So my test data will be 1st of Jan 2022. Okay, this is the sequence. Clear here? Basic idea of time series. Random. Any 70. And it need not be time bound. Now, most of the time, when we are doing a time series, it is going to be a univariate analysis. So time series can be of two types. Univariate time series and multivariate. A univariate time series is when we have a Y and we want to forecast Y using Y. Okay, for example, if I have sales, I will use sales to predict sales. This is called univariate analysis. And multivariate analysis is if I want a Y to be forecasted, I will use the features to forecast. Just like a typical linear regression problem. But the way we analyze a multivariate in time series is very different from what we do in a linear regression. So most of the time series focuses only on a univariate analysis, and it has a lot of other components that uses the features. We will see that in the coming classes, that what are those models where I can use X to predict Y. What are those situations where I cannot use X? Situations where I have to use or I can use X to predict Y. Okay. So 90% of the time we use the univariate analysis for time series. Now, why univariate helps? Because of what? Because of the sequential nature of data. Okay. Now, the next thing is, what are the components of time series? Now, every time series data has or can have 4 main components. So they are called as S, C, S, and I. The first S stands for secular. C stands for cyclic. S stands for seasonal. And I stands for irregular, sometimes called random. These are very critical components that you have to analyze when you are doing a time series analysis. If you do not do this, your entire time series analysis will be a flop. Okay. Now let us understand how to identify these 4 components. First, understand what is the definition. So what is the S component, which is the secular component. So secular component is any time series that changes over a period of time. So we can call this as change over a period of time. Can you tell me what is the meaning of this change over a period of time? What do you understand by this statement? Something that changes over a period of time. क्या मतलब है इसका? Very good. Something that can increase or decrease with respect to time. Time means it can be years, minutes, whatever the time that you are taking. Okay. So you can have something starting at a low value and over a period of time it has increased. or you can have a component where it was high and then over the years it has decreased. So this is called change over time. Now you can take real life examples. What has changed over a period of time? What has increased? Rates, cost of living in general. Right? Property prices over a period of time, they have increased. Now, what has decreased over a period of time? Now, take very practical examples. Air quality, pollution level. Okay, so pehle it was healthy, now it is decreasing. Look at the condition of Delhi and of late in Bombay. Okay, so air quality level, landmass, the area available these days for anything. Okay, so earlier if it was 20,000 kilometers, now it is 3,000. As over a period of time decreased. So this is called secular data. So a secular component. Next, we have cyclic component. So cyclic, as the name suggests, it is an up and down of any business model. So you can have high profits once, then the profits may decrease. Then you can have again a profit, then again there may be a dip, then increase, decrease. So it's the up and down that you see in a typical business. Then we have the third one of the most important part of a time series. This is called seasonal component. Can you guess from the name, what is the meaning of seasonal?
Let's say in winter, the seasons will start.
Correct. So seasonal component means the entity that you want to forecast, it is at its peak or it is less every year during the same time. Okay. So for example, if this is January to December 2010, then January to December 2011, and I am plotting this, let's say, January to December 2021. So I have 10 years of data, 11 years of data, and this is sale of woolen clothes. So what kind of graph can I expect? So this is 2010. So January at a peak, February, maybe not so much, March, April, May, again December. Okay, so again, next year, there could be a peak. February, maybe little, March, April, May, June, July, August, September, October, November, again December. So you can see a clear-cut pattern that every year during the month of December and during the month of January, there is a peak. Okay, so this is known as a seasonal component. So is seasonal, so this is called seasonality or seasonal component. Now, when I'm trying to forecast, I should always get rid of seasonality. Because seasonality, you can consider that to be some kind of an outlier. Okay, but here it is a good value, whereas outliers in general, we can say they are extreme numbers. So here, when I'm trying to forecast for the next lag or for the next record, I should not have any seasonal component in my data. In case if we have a seasonal component, then you have to use one other model which takes into account the seasonal component. Okay, so that is called as S-ARIMA. So we'll come to all those components, but in general, seasonality has to be removed before making forecasts. And the last one is irregular or random. So again, as the name suggests, irregular means sudden spurt or sudden dip. There can be nothing initially and then suddenly there could be a increase, and again there's a dip, then suddenly there's an increase of something. Okay, random or totally dependent on events. Can you give an example of this, irregular or random?
Savings.
Man, savings is not random. Savings can be secular or cyclic.
Temperature changes.
Temperature is never irregular. Temperature is usually seasonal. Something recently that has happened. Recession? Recession, you can probably say, but recession, what are you going to forecast? Recession as an event is irregular, fine. But can you forecast recession? As a value? No. What happened during COVID?
Also,
किसका डिमांड ज्यादा था या कम था ड्यूरिंग कोविड? Masks, kits, and
Oxygen cylinders.
all these things, okay, which we have probably never even bothered to look at. Hand sanitizers, kabhi use kiya hai before 2020? We didn't even know such a thing existed. Hand sanitizer kya hai? Mask we hardly used to wear. Okay, but what happened in that last 2 years? There was a tremendous demand for this. Because एक ऐसा event हुआ था which caused the sale to be at its peak. So sudden event. So this can be called as a random or a irregular event. Now, how many people buy masks? It has come back to its first dip before they introduce the next virus. Okay, so this is a irregular event. So these are the 4 components that you might see in every data set of time series. Compulsory nahi hai ki every data will have a seasonal. For example, stock market. Can you see secular? Secular means it is a trend. है ना? Upward trend or lower trend. So stock prices mein can you see a trend? Nahin? Of course, yes. ठीक है. Trend क्या है? What is a trend? Anyone who's interested in stock? कोई करता है? You do. Okay. Now, मान लो you are a stock trader or you like to invest in the market. Okay. So you purchased, let's say, some stock in 2015 at 50 rupees. ठीक है? ठीक है, 2015 में you invested 50 rupees का एक stock, you got some thousand stocks. Now this is 2022. Now during these last 7 years, what has happened? The stock would have probably climbed 50 fluctuate ये होते होते maybe today it is at this rate. तो ये क्या trend है? What kind of a trend is this? No. उतना डिटेल पे नहीं है ना. This is not a stock trading class. This is a positive trend. है कि नहीं? Why it is positive? Because it is increasing. Simple. Imagine a line going. तो वो ऐसा जा रहा है या ऐसा जा रहा है? It is going up, right? So this is called as a positive trend. So every data, 90% of the data will have a trend. Okay, there are cases where there is no trend, but majority data will have some kind of a trend. Now, what is a downward trend? It is a reverse of this. You got something in 2015 and this is 2022. So the price what at its, let's say at this, so over the course of time, it has depreciated. Maybe suddenly there is a rise, but overall it is like this. So here the rates are decreasing. So this is a negative trend. Okay, so this is called a secular or a trend data. So two things we analyze in any time series data. Is there a trend? And is there a seasonal component? Okay. If there is a trend, that is also a problem. If there is a seasonality, that is also a problem. Because when we want to forecast it, we want to ensure that whatever the data has seen in the past, it should also be reflected in the future. That is the assumption. Okay. So when we take both these into account, we will get only the immediate past, which is always going to be in the increasing or decreasing depending upon the past, which will not reflect the seasonal component. So we have to treat the data in such a way that we remove them, but when we forecast, it comes back. Clear here? Basic concepts. What are the components of time series? अगर आप नहीं करोगे तो impact नहीं करेगा. But when you take it, it will impact. We'll discuss those points. Just mute it. When you take an outlier for calculating mean affect करेगा? कितना करेगा? Depending on the outlier. Okay, but there will be an impact. So that is why it is not a stable measure. So when you have a trend in the data, okay, if you look at the first graph, okay, now if I'm going to forecast for the future, so what is the trend that I will get? It will match only this part because this is a lag I'm taking. But if I want it to match this pattern or this time lag, I have to take this time lag. Barabar? So that is the reason why lag is very important. आपका जो component है, how significant is that? Okay. Same goes for seasonal component. Seasonality आज है, कल नहीं है. Okay, you definitely won't buy a sweater in March. But if you take the seasonal component also, तो March में भी high दिखाएगा, which is not a right forecast. Is this clear? Online, any questions?
No, sir.
No, sir.
Okay. Now we'll come to this has a lot of theory, by the way, because unless you understand these terms, time series is of no use. बहुत सारे terms हैं इस पे. So next we'll see what are the main models. So the models in time series, they are additive model and multiplicative model. So the additive is applicable to trend and seasonality. And the multiplicative is also applicable to trend and seasonality. Now, mathematically, how do you represent an additive model? So let us say that I want to predict the value of y for a given time. So this is how we indicate. Y could be anything: sales, stock price, gold price, GDP, okay, sales, or number of deaths, number of births, जो भी है, T is for which time. So Y of T, and if I am doing an additive model, so the combination of all the four components, okay, working together. So we have S, C, S, I. Okay, and then you do the addition. So at T, at T, at T, and at T. So that means all these are independent. So this is called additive trend or additive model. Multiplicative model is Y of T when they are working together as one unit. So S and C are working together, and then maybe seasonality and this, they are working together. So this is a dependent factor. Now, why this is important? This is one of the hyperparameters in the time series model. So when we are treating the data, there is something called as data smoothing that we'll see in the next session. So when we are smoothing the data, where we are removing these different components, we have to specify whether my data is having a trend which is additive or multiplicative. Whether my data has a seasonality, it is additive or multiplicative. So how do you identify these two components, additive and multiplicative? And that is done by plotting the graph. So when you plot a graph, let's say you want to forecast sales, and you see a trend over a period of time. So if you get a graph which is something like this, okay, it's a linear pattern. This is an additive trend. And if you are getting a graph in form of a curve, okay, you have a sales which is starting high, then there is a dip, and over a period of time it has increased. This is called multiplicative trend. Clear? So does it make any difference to my forecast? Definitely yes. There will be some impact on how you specify the value for the trend. If you give an additive trend or if you give a multiplicative trend, it will have some impact on your overall forecast. So how do you build the model then? Take this, check the result, take this, check the result. So whichever is giving you the best results, that is going to be your model. Okay, so this is some kind of a cross validation. Clear? Online, any questions? Okay. What is multiplicative seasonality and additive seasonality? Yeah, Tejas. So same thing. Let us say I'm plotting the sale of mangoes, for example, from 2019, 18 and 2019. So January, February, Jan, Feb, March, April, May, June. So this is the peak. 2019, January, February, March, April. Then there's a dip. So this is the peak. So look for the linear versus look for the curve. So here I can say this is an additive seasonality, whereas this is some kind of a multiplicative seasonality. So you have to analyze the data, plot the graph, and look at the seasonal component and judge for yourself whether it is showing additive or multiplicative. Okay, there is no hypothesis testing and all these things. You have to analyze yourself by looking at the graph and then finding out whether it is this or this, and accordingly you pass that as a hyperparameter. Can there be a data set that does not have a trend or a seasonality? Yes, there can be. Let's say sale of petrol, for example. So over the last couple of months, it has remained stable. Okay, not much of a trend, and definitely it is not season dependent. So it is pretty much a parallel line. So a straight line. So we can have a data where there cannot be, or there is no trend, there is no seasonal component. Clear है ये? Any questions, any doubts? Tejas, Manish? Yash? Ankita? Keshav? Okay. The next topic is stationarity in a time series data. Now I told you that a time series data has the 4 components and we have to check for the trend and we have to check for the seasonality. Okay, irregular, cyclic may be there. Okay, that is part of the data, but trend and seasonality are 2 important components. So when you have these 2 in the data, it means that my data is not stationary. So a non-stationary data means there is a trend. Okay, so if you draw the graph, you will have something like this. Or you will probably have a trend like this, which is like this. So this is called as a non-stationary data. Clear? So when you are analyzing the data, you first identify which value you want to forecast, get that, ensure that it has a time component to it, and then you plot it. So you collect the data, ensure that it has a time component, and then plot. So when you plot, you will get either this, or you will probably get something like this. One of these 3. So if you are getting 1 or 2, that means the data is having a trend. So you need to detrend it. Detrending means you are removing the trend from the data and you will get graph number 3. So your graph should look like graph number 3, which is a detrended graph or a detrended data. This means it has a constant mean and variance. Now look at the first graph, this one. Is the mean value changing? When the graph goes up, does the average value change?
Yes.
Yes. When the graph is coming down, does the average value change? Yes. So stationary. Whereas when I'm having a flat graph, what happens to the average value? It remains same. I won't say same. It does not change that much. There could be some variations, but not that much. So I have to get a graph which resembles number 3. So there is no change in the mean. There is no change in the variance. So this is known as a stationary data. Clear है ये? How do you identify a stationary data? Identify stationarity. So to identify the stationarity, you have to plot the data. Now, suppose after plotting the data, you're not able to make out whether the data is stationary or not. Just like what we did in linear regression. कौन सा टेस्ट था याद है? There is a plot that sometimes can be confusing. You do not know whether it is having this, क्या है वो? Heteroscedasticity. Isn't it? वो assumptions check में हम करते हैं. Your plot can be very confusing. So we do the check test for heteroscedasticity. So similarly, when you are checking for stationarity, trend is very easy to spot. But in case if you're not able to make out, so there is a test available in the time series, and that is known as ADF test. This is known as augmented Dickey, DICKEY, augmented Dickey-Fuller test. So you pass the data that you want to forecast into this function called augmented Dickey-Fuller, and this will return a p-value. So the p-value is less than 0.05. Stationary. If the value is greater than 0.05, it means data is not stationary. Is the stationarity part clear to everyone? Stationarity क्या है? What is stationarity?
Check the data means constant.
That is not stationarity. When there is a trend in the data. Okay. Stationary. If the data does not show a trend, it means it is stationary. How do you check for trend? Number one, plotting the data. Number two, augmented Dickey-Fuller test for stability. If it returns a value, p-value less than 0.05, it means data is stationary, else it is non-stationary. Online people, is this concept clear to everyone?
Yes, sir.
Okay. So now let us say that I have taken a data. I have done all the EDA. Then I want to do the forecasting. Now, before that, I have to check for station. Gives me a p-value 0.05. That means non-stationary. Now, what do I do next? I have to make the data stationary. Okay, you cannot go to a model building without a stationary data. So data has to be made stationary. So when you have a stationary data, this is good. Okay, so when the data is stationary, go with the model building process. If the data is non-stationary, then you have to first make the stationary and then go for the model. Now the question is, how do you make the data stationary? Non-stationary से stationary कैसे करते हैं? So there are plenty of techniques to do it. The most frequently used technique is something called differencing. Okay, you can take a log and then you can do it. You can take any other transformation technique to do it. Okay, but differencing is a method that we can use to make the data stationary, or you can use any transformation method. Now, what is differencing of data? Now, let us say that I have a, let's take some value called sales, for example. Okay, now I have the time period here. So this is time T. So this is time 1, 2, 3, 4, 5, 6, 7, 8. So I have the data like this: 211.8, 303.1, 417.8, 446.3, then 501.9, 488.4, then 491.6, then 500.3. So let's say that I have a data like this. Now I want to forecast for the next quarter. Okay, this is quarter 1. This is quarter 2. I want to forecast for the next 2 quarters. So let's say 9, 10, 11, 12. Second, 1, 2, 3, 4, 5, 6. Okay, I'll just take one more. Okay, I have 3 quarters data. I have to forecast for 10, 11, and 12. Now I take this data. नहीं है मेरा मैं each time when I'm trying to open the hotspot वो आ जाता है. Now see.
We have set some time on
किस पे?
hotspot पे.
Hotspot use नहीं कर. I'm using the
Informaticus.
का. अभी is it okay now? Okay, ठीक है. Now assume that this sales data is meaning of differencing the data. So differencing is actually very simple. It is subtracting the data from its lag. Okay, that is called differencing. So here I'm going to call this as differenced value, or I can say difference of sales. Now, what is the value before the first time? Null. It's not 0. Okay, there is null. So current T1 minus, which is not there. So this will return what? Null. Right? Something subtracted by nothing. Nothing is not 0. Okay, so kuch hai nahi. Uske saath I am subtracting, so this will return null. So the first observation is null. What is the second value? 303.1 minus 211.8. So it will give you some number. So let's say that number is 80 something. Okay, you don't have to, don't worry. Okay, some must be around 80. Then 417 minus 303. So let's say some 101. 446 minus 417. So let's say some 35. So 511 minus 446. Okay, so that's some 60. Then 488 minus 511. So this is some minus 40 something. 491 minus 488, so minus 3. So this is 9. And this is minus 120 something. Okay. So now my original data, which is non-stationary, has been differenced. Now I have a new set of sales, which is a difference data. Now this becomes my input. Now this data has to be checked for difference, for stationarity. If this data is stationary, 99% of the time, after doing a first difference, data becomes stationary. Okay, usually that is what we have observed. If it doesn't, then we have to do a second level differentiation. So that means second level means 211 minus 2 lags behind. So null. 303.1, 2 lags behind. That means null. Then third one, 417 minus 270. That is this minus this. That is 2 lags. Okay, so here the data, assume it is stationary. So what do? We build a model using the stationary data. And if I plot this graph, what kind of graph will I get? I will get something like this. Okay, so which has a constant mean and variance. Clear here?
So suppose the difference in values of higher variance नहीं है इसमें, तो हम normalize कैसे करेंगे?
किसको normalize करना है?
Difference अपने सेल्स वैल्यू मिली ना अभी.
Difference value. हाँ.
उसमें जो variation ज़्यादा आ रहा है, हम normalize कैसे करेंगे?
Difference को normalize नहीं करना है, original data को करना है. You either normalize the original data and then check for stationarity, or difference the original data and check for stationarity. You don't normalize the difference data. वो बहुत ज़्यादा complicated हो जाएगी.
How to normalize data or the difference?
Normalization, बहुत सारे technique है ना. You can use min-max, you can use log transformation. Transformation
On what basis will you normalize?
On what basis?
Let's say if, as you said, right, now we are seeing trends. So if we have a new trend, then directly go to model.
Log transformation will take, usually will solve that linearity into non-linear. We do not know which transformation will work. Even difference, we do not know whether it will work. So these are techniques to remove those components.
Remove those components.
It's a seasonal component, we don't want. See, trends, we don't want. So when you want to remove these components, we can use these techniques. The difference will work, transformation will work, anything will work. You try which is working and you can use that.
So after transforming this data into linear.
Transform into?
After transforming, like if we remove the trends, we don't want trends, right?
Correct, correct.
So after removing that, the ideal data should look like linear, right? It should look linear.
You're removing that, no? When you're removing, increasing or decreasing, you are removing that linearity and you're making it stationary. See, let us say your original data is something like this. Okay, ये क्या है? What is this? This is a trend. Now, when I'm transforming the trend, I cannot use this. Okay, so I want to remove this. So after removing the trend, I'm getting like this.
But it means we are transforming the original data, right?
We are differencing the data.
So will it give accuracy predictions? And then we will, if we try to remove this, we'll only select one particular division of time, right? I will say we have the data for 2020 till now, but for last 5 years it is showing 6 stable events, so we'll consider the last 5 years.
Correct. So in time series, you have to be very careful what should be the time duration that you're taking. because today's price may not be applicable, or you cannot compare today's price with 10 years past price. It may not be, you cannot have a correlation. But today's price may be compared with last year's price. So that is called, that is the next topic, autocorrelation, where the nearest lag will have a high correlation, and as you increase the lags, the correlation will decrease. So that means that lag is not significant. So that is called as the ARMA model, which is the one of the basic models of time series. Autocorrelation, moving average model. Okay, अभी बहुत है time series में. This is a huge chapter actually. But to understand all that, you have to be very thorough in these basic concepts. हाँ लेंगे लेंगे. I think
we have 5 points in time table. So if I want to make it into stable, I want to make the data stable. So out of this 9, I have to move it for 9. ऐसे होगा क्या?
What do you mean by stable?
I don't want trends.
So difference it. You don't want trends or you don't want lags. दोनों में अंतर है.
Trends.
ट्रेंड नहीं चाहिए तो डिफरेंस करो. See, 9-10 data points are actually too less. Time series के लिए you need at least some 5-6 years of data. Only then you will have at least 100 data points. या quarterly है तो और भी अच्छा है. I mean, more data you have, better it is. 10 points में you will hardly have. So when you are removing the trend, you have to difference. But when you are taking lags, that's a totally different concept altogether.
Is there any inbuilt function which will let us know which lag to consider?
हाँ है ना. That is called autocorrelation and moving average. अभी वो सब बचा है. This takes 2 days. The theory part to understand. Hands-on is very easy. 2 लाइन पे आ जाएगा, हो जाएगा. But when you see the graph now, इसको करना क्या है? The hands-on is very easy. ठीक है? हाँ?
Time series is not recommended for us.
Of course. Actually, time series में there is something called unseen data. You are going to forecast for tomorrow, and this is a univariate analysis. So you don't have a data as such.
So in time series, whatever data set we will be using, that will be for, let's say, let's take an example for 2020, 2020,
20 years ka data.
2 years.
Okay, 20 to 22. Okay.
Or let's say we have the data on data monthly basis. So we'll be having 24 days.
Correct.
And then we will focus for 23. Let's say
Correct.
data set.
See, predictions आप किसके लिए करते हो?
Future.
Always future है ना. You don't predict for 10 years back.
But हमने जो linear regression वगैरह किया था, we did work only on existing data. We did not take any.
नहीं. See, when you are doing a linear regression, you have a data, then you split it. ठीक है? Train, test. आपने predictions किस पे किया है? Test पे किया है. Not on unseen data. ठीक है? This is, you are validating whether my model is good or bad. बस.
But in this case, in time series, we will be doing the actual prediction.
No. I'm just trying to tell you the difference between both. Both are identical. Okay. What happens in a linear regression is the model that you build here is applied on the test. And then you compare the results, y and y hat. Okay. You don't go beyond this. अब इसके beyond क्या है? The unseen data. अभी unseen पे क्या है? There is no y. ये नहीं है. This is nothing but future forecast. I won't say forecast, future predictions. So where you will be given a file which will have only X. And this model is applied on this X to get Y. So these predictions will be for 2023.
We haven't done the second one.
ये अगर data ही नहीं है तो कैसे करोगे? Unless you want to, you can create your own data and find it. ठीक है? Now, how will you validate whether my forecast or predictions for 2023 is good or bad? अभी 2023 आएगा, you will get the actual data, then you will compare with this y hat. अभी मुझे actual data यहाँ पे मिलेगा y, then you compare, okay, predicted value was y hat, my actual is y, so how good is my prediction? Okay. Time series में क्या होता है? Time series you have a sequential data. So this is 2020. This is 2021. And this is 2022. Okay. Now your training data will be based on, let's say, from 20 to 2022 June. And the test data will be from 2022 July till December, just to validate. Okay. So here you also have a y and y hat. Because 2022 July to December already y is there. So you can do the comparison. Now, based on the result, how do you forecast for 2023? Is you specify how many periods you want to forecast. अभी मान लो ये yearly data है, sorry, monthly data है ये. This is January to December, January to December, January to December. Okay. Now in the forecast you specify, I want to forecast for the next 6 months. So 2023 ka forecast will happen from January to June. If you specify 12 months, it will happen from January to December. So here you specify the time period. And then when you get your actual data, you do the same thing. My forecast was so much, my actual is so much. So the difference between these two is in the time series, there is no X. Because it is a univariate analysis. Whereas in a linear regression, you have a X or multiple values for X. यही difference. Okay, we'll take a break now. 11 o'clock. Meet in 15 minutes. Online, people will meet in 15 minutes. Okay, let's start. Okay, so continuing with the time series. So now we'll go to the next technique, and this is called as smoothing. Smoothing or data smoothing. Now, why should you smoothen the data? What advantage do you have? Okay, so that is what we are going to learn in this topic on data smoothing. So there are different techniques to smooth the data. We look at all those techniques. Can I use all the techniques all the time? Answer is no. So you have to first look at what are the components. So depending upon the component, you have different smoothing techniques. Okay. So first of all, we have to understand this term called, you are aware of this term, which is called noise. Hakini, what is noise?
External influence.
Right. Either it is irrelevant information or it is too much information. That is called noise. Now, when you have a noisy data, what is the problem with it?
If we have noisy data, then consider the interruptions of the data. It will make predictions based on the complete data.
Okay.
So if noise is the values of the data, then we can say there is noise level. If it is quite high, the predictions or output can be biased towards those ones.
It could be, okay. Anything else? Tejas, Ankita, Keshav. What is noise and implication of noise in the data?
Can outliers be considered as noise?
Of course. Noise क्या होता है in a data? Okay. Now let us say that I have 5,000 data points. Okay, and I'm taking the sales. Now, if I plot this data for sales over the last whatever number of days, the data could be something like this. Okay, this is noise. Noise means it is not very clear that what is the data telling me. Okay, because I have taken probably too many lags into consideration. And that is not really helping me to identify the patterns. So this is a noise. So smoothing is a technique where you are reducing the noise from the data. So here you can write definition of smoothing means to reduce noise from the data. Now, what is the advantage of reducing noise? So the same data after the noise reduction, you will have a data probably something like this. Okay, now see the difference between the first one and the second one. Okay, which is easy to read. Where do you have more information? Okay, so this is called smoothing technique. So there are different ways of reducing the noise. So there are smoothing techniques which are frequently used. The first one is called MA or moving average. Anyone who's a stock enthusiast will know what is moving average. It's a frequently used technique. So moving, I'll explain that part, moving average. So this is the first technique. The other one is called exponential smoothing. So in exponential smoothing, we have three techniques. One is called as the simple exponential smoothing. The second technique is called double exponential smoothing. And the third one is called as triple exponential smoothing. So in a simple exponential smoothing, we have alpha as one of the smoothing parameters. In double, we have alpha and beta. And then in triple, we have alpha, beta, and gamma as the smoothing parameters. Okay. Now, when to use simple, when to use double, when to use triple, we'll come to that part in some time. Okay, समझ में आ गया? What is smoothing? It is a technique to reduce noise from the data for better analysis. So whenever you have forecast on a data which has trends, you can always smooth the data by taking the appropriate lags and then reduce the noise from the data for a better forecast. Otherwise, the forecast may not be reflecting the correct picture. So we look at the first technique called moving average, the most simplest technique. So these techniques are generally used for short-term forecasting. Okay? Short-term forecasting generally is how much? 7 days, 3 days, 15 days. Okay, these are short-term forecasting periods. So what is the technique for making a moving average? Now let us say that I have a data like this. I have 10 days of data. Okay, this is day 1. This is day 2, day 3, day 4, day 5, 6, 7, 8, 9, and 10. Okay, this is my actual data. And here I can write as moving average. Now let's put in some dummy values. Let's put 211, 206, 240, 239, 270, 239, 247, 252, 68, 291. Okay, so let us say these numbers are total number of units sold of some product. Okay. Now I feel that this data is too much. I want to take only a small amount of data. Now I cannot ignore these records. So I will do something called as a moving average with lag value of 3. So what it means is, this is my time period. So I'll be considering the average of the lags. So that means for my first data, I will not have anything here because there is no lag 3. For the next one, there is no lag 3. For the third one, again, there are no 3 data points before that. Now, what is the value for the fourth lag? So this time period where t equals 4, this is time period t. So because I have taken a lag of 3, so the predicted value for the fourth time period is going to be the previous 3 units divided by 3. That is the average of the previous 3. So that means for this record, the predicted value is going to be 211 plus 206 plus 240 divided by 3. So what is the value? 6 plus 0, 6 plus 1, 7, 4 plus 1, 5, 2, 4, 6 upon 3. So 3 2s are 6, 219. So the predicted value is how much? 219. Now for the time period 5, it is going to take the last 3. So that means from 2, 3, 4. So 9 and 6, 15, 1, 5, 4, 5, 8.
Where lag is here.
Lag is same. Taken the lag of 3. Okay. And this is 6. So upon 3. So 3 and around 227. No, 3 to the 3 to the 6. Whatever. 3 to 28 something. So this is the predicted value. Now same thing for the rest of the things. So now I have a smaller data set which is taking the data points also, and also it is considering the relevant lags. So now my new data is going to be this. Now if you compare this data and this data, this may have noise, whereas this data will probably be a much smoother graph. Understood? This is called moving average.
So when you are always
Up to you. Lag है ना कितना? How much lag you want?
lag value जो हम बढ़ाएंगे तो accuracy भी इतना ज़्यादा रहेगा.
That depends on the data also. See, if you are taking the stock prices, you generally take smaller lags. Sorry, you take bigger lags. Because the value of stocks generally don't fluctuate that much between 2 immediate lags. Aaj aur kal mein, you will probably find a difference of 5 points, but not hundreds. Okay, so the lags will be higher in such cases. Okay, so we'll do one simple exercise just to ensure that you have got this concept. So Excel पे करते हैं. Let me share my Excel sheet also. So here you can take the time component T and you can take this as some Y variable. Okay, so I have taken 20 data points. And you can just put some dummy values here. Let's say total number of units sold. Let's put 3. Okay, so number of units sold, time T, it could be days or it could be weeks. That is, we don't care. Now, if I take the lags, so lag equals 3 and I can take lag equals 4 and let's take 3 lags, 3, 4 and 5. So when I take lag equals 3, what is going to be the forecast for the first record? Blank. So this is blank. So you can just shade it here. So this is blank. This is blank. And this is blank. Okay. What is the forecast for the time period 4? That is going to be average of the previous 3. 1, 2, 3. Correct? Now just drag the formula here. So now this is my forecast. Or you can say this is my new data points, which is an average value instead of taking the actual data. Now let us plot these two. So let me plot this guy. Now study the chart and see the difference between these two. Which is smoother? The second one. So this is what smoothing can do. So if you look at the first figure, you will see that it has some noise. And if you look at this one, it is smooth. Now, how smooth you want, that depends on how many lags you want to take. So lag should not be so much that you don't get any trend, and it should not be so less that it is replicating your actual data. So it has to be an optimum lag. Okay. Clearly, concept of lags. Now, how do you check for lag equals 4? So first 4 values will be blank. So 1, 2, 3, 4 will be blank. So the fifth one is going to be average of the previous 4, that is 1, 2, 3, 4. Now see the prediction. 306, 329, 306, 333. Now if I so which is giving you a better prediction. Okay, so here you can do the y minus y bar. So which is the y value? The time at data at time t. So this is y. This is y bar. This is y bar. So 306 minus 329. So this comes to how much? Minus 13. And this comes to how much? Minus 20. Sorry, minus 17. Okay, so you keep calculating this. So 344 minus 290, 344 minus 323. So find out the error component, do the square, add it, and then you will get SSE. Okay, so this is the same thing that you did in linear regression. SSE, MSE, RMSE, same thing applies here also. So find out the MSE or RMSE, find out which is having the least value. So that becomes your optimum lags. तेरे समझ में आ रहा है? ठीक है? So ideally lag should be greater than or equals to 2. Okay, now we'll go to the next topic, which is exponential smoothing. I'm not getting into the formula for exponential smoothing because it is not really required to understand all these terms. If you want, I can share you the list of formulas. You can go through them, but understand the theory when to use given a data set. Okay, that is important. So exponential smoothing. So the concept of smoothing remains the same, to reduce the noise in the data for better analysis. So here we have three categories. One is called simple. So a simple exponential smoothing is an alpha smoothing. So this is used when you do not have a trend and a seasonality. Both are missing in the data. Okay. So in the morning session, we were discussing about trends and seasonality. I asked you whether trend and seasonality, is it always present in every data? So you said no. So when you have such kind of a data, you will use a simple exponential smoothing. Then we have a double exponential smoothing. So here we have alpha and beta. So this is used when there is a trend in the data, but there is no seasonality in the data. Can we have this? Can there be a trend but no seasonality? Yes, you can have. Stock is a very good example. Stocks are generally non-seasonal. Then we have the third component, which is called triple exponent. This double exponent smoothing is also known as Holt's method. So here alpha is the smoothing component and beta is the trend component. Then we have the third one, which is called as triple exponent smoothing technique, which has three smoothing parameters: alpha, which is the smoothing component, beta, which is the trend component, and gamma. So here triple is used when there is a trend and there is a seasonality. So gamma becomes the seasonal component. And this is known as Holt-Winters smoothing technique. So simple is used when there is a trend, when there is no trend and seasonality. Double exponent used when there is a trend but no seasonality. Triple is used when there is a trend and there is a seasonality. Now, can there be a fourth component? That is done. Triple mein aa gaya wo. When there is no trend, but there is a seasonality. So this comes under a special model which is called as S-ARIMA. So that we'll see later on, because you do not know what is ARIMA yet. Okay, so I have not covered it. So we'll do it later. But remember, this is also possible, where you have a data that does not have a trend, but it has a seasonality.
तो स्टॉक पे कैसे इंप्लीमेंट कर सकते हैं? स्टॉक मार्केट पे कैसे इंप्लीमेंट?
कौन सा ये फोरकास्टिंग? अभी वो हम करेंगे. You can do moving average to find out what is the forecast for the next n periods. एकदम basic forecasting. You're not considering anything else. ठीक है, lags कितना है you don't, you're just guessing कितना lag है. But when you want a more complex model, you use something called as an ARMA model, ARMA, auto regressive moving average model, which we are going to see now. और complexity चाहिए, you do ARIMA. इससे और कॉम्प्लेक्स चाहिए, you do VAR, vector auto regression. So vector auto regression are, this is the multivariate analysis. ARIMA, these are all univariate analysis. Any questions so far? अभी और भी है. Clear है मनीष? Online? Ankita and yeah, Ankita is dead. Okay. Fine. Now we'll come to the time series models. So we have seen one model which is called moving average, which is a smoothing technique that is also considered to be as a model. The other model that we're going to see now is called the AR model. AR stands for auto correlation, or we can say auto regressive. Now, what is the definition of correlation? What do you mean by the term correlation? Dependency of what?
Singularity.
Singularity.
Correlation shows how two different variables are related.
Correct. Correlation is the relation between two features. Okay, but what is autocorrelation? Autocorrelation is relation of a data with itself. Okay, so relation between a data at a given time with the same data at another time. This is called autocorrelation. So stock price of today with stock price of yesterday. What is the correlation? Stock price of today. So यहाँ पे K क्या है? Any guess? What is K here? I said T and T minus K. क्या है? क्या? What is the term for that?
Lag.
Lag. Very good. So K represents lag. So now you can correlate. आज का प्राइस, कल का प्राइस, आज का प्राइस, पिछले हफ्ते का प्राइस. What is the correlation? आज का प्राइस, पिछले साल का प्राइस. So K is that lag. Okay. So same data, but belonging to two different time periods. That is called autocorrelation. Okay. Now, generally, what we see, if you plot the data along the x-axis, we have the lags. Correlation का range क्या है? What is the range of correlation? -1 to 1. Okay. So -1 to +1. So when we are dealing with the same data points at two different time periods, what is the correlation of data with itself? क्या है? Data of today correlated with data of today. तो correlation कितना आएगा? 1.
It is highly correlated.
ठीक है? Anything with itself is always 1. Okay. So my first lag will always have 1. Okay. So it will be something like this. The relation of the lag, of the data with the previous lag. Okay. It will be slightly less. It will be high, but definitely not 1. Come over. The price of today with day before yesterday. परसों का. वो क्या होगा? It will be less than yesterday. Fourth one will be less than third one. Fifth one will be less than fourth one. So like this it goes. So you will see that as the number of lags are increasing, what happens? Correlation decreases. Okay, so there is a rapid fall of correlation. This you will always find in any time series data. Okay, increase in lags, decrease in correlation. Clear है ये concept? So this is known as the auto-regressive model or AR model. So here also we have the K, which is a significant factor, which is the lags. So now we have two models. One is called moving average model. Then we have an auto-regressive model, which is AR model. One tells you the average depending upon the lags. One tells you the correlation depending upon the lags. Okay? Now, what happens when we combine the power of MA and the power of AR? Now these are two standalone models. एक कुछ करता है, ये अपना कुछ करता है. Now when we combine these two, we get a more powerful model, and that is called an ARMA model, which is called ARMA model. So ARMA stands for auto-regressive moving average So what happens in this model? You are predicting the value of y at t. And what are the two values that you are taking? You are taking the auto-regressive values. So sigma of auto-regressive values plus sigma of moving average. And here, the value of k is going to be from 1 lag till n lags. And here, the value of k is going to be from 1 lag to n lags. And there will be, just like linear regression, there will be an error term. Okay. Now this ARMA is also known as a PQ model. Now, what is a PQ model? Now here I have given sigma of AR. Okay. Now sigma of AR is what? How many lags I want to do the auto regression. What is sigma of MA? For how many lags I want to do the moving average. So how do I determine the value of AR and the value of MA in terms of its lags? That is, how many significant lags I have to consider for AR, how many significant lags I have to consider for MA. You remember we did that moving average exercise. We took 3 lags, 4 lags, 5 lags. Okay? But which is a significant one? Should I take 3 or 4 or 5 or 6? Which number? Okay. So that is determined by this P and Q. So auto-regressive model is known as an ARP model. Where P stands for number of significant lags. And moving average is known as an MAQ model, which is a moving average model, where Q stands for the number of significant lags. And ARMA is called a PQ model, where P is the number of significant lags of AR and Q equals number of significant lags of MA. Is this concept clear to everyone? Clear? Okay. Now, can anyone tell me, if I am building the AR model, what is the criteria for the data? Data should be क्या बोला? Train. वो तो है. But what should be the property of the data? Stationary. Good. My data has to be stationary. Always remember, whenever you are building any time series model, data has to be stationary. That is why we do the check. Plot the graph, check stationary. If it is not stationary, you difference the data. So in the ARMA model, data is always stationary. Okay. When you're building an ARMA model, the data is always stationary. You can verify that in the data. Now the question is, what if the data is not stationary? Can I use ARMA model? No, because ARMA says data is always stationary. So ARMA cannot be used. So what should we do? We have to make it stationary. So that is where we introduce a new model, and that is called ARIMA. Auto-regressive integrated moving average model. So AR stands for auto-regressive, I stands for integrated, and MA stands for moving average. Now ARMA is known as a PQ model, whereas ARIMA is known as a PDQ model. What is P? Number of significant lags for auto regression. What is Q? Number of significant lags for moving average. Can you guess what is D? Very good. The differencing. How many times I have differenced the data? Now I told you that when you difference the data, that becomes the first difference. When you subtract T1 minus T2 or T2 minus T1, that is first difference. Now, after you difference the data, does the data become stationary? We have to check. Okay. Now, if the data does not, if the data becomes stationary after the first differencing, what is the value of D? It becomes 1. If the data is not stationary after the first difference, we do a second level difference. And if the data becomes stationary in the second level difference, what will be the value of D? It will become 2. समझ में आ रहा है? Let me explain this. Let us say my data is, this is 9. And this is my Y. So 1, 2, 3, 4, 5. Now my data is 101, 106, 120, 95, and 99. Now, let us say that Y is not stationary. Okay? So what is my first level differencing? First value will be null. Second value क्या है? 106 minus 101. So this is 5. Then 120 minus 106, 114. Then 95 minus 120. So that is going to be minus 15, minus 25. Then 99 minus 95, 4. So D का value क्या है यहाँ पे? 1. Now, is this data stationary? We will check using the ADF, augmented decay-filler test. If this returns true, sorry, not true. If this returns a p-value less than 0.05, that means this is stationary. So that means if I am using an ARIMA model, my D value is going to be 1. Clearing it? If this returns a p-value greater than 0.05, what is the meaning of this? Data is not stationary. So what do we do? Second level differencing. So when D is 2, what is my data going to look like? This is going to be null. This is going to be null. अभी क्या है? 120 minus 101. So which is 119. 95 minus 106, minus 11. 99 minus 120, which is minus 90. Now, is this data stationary? If it is yes, then what is the value of D? 2. This is how you determine the value of D for an ARIMA model. Okay? So when data is stationary, D value is 0. You can use ARMA. If the data is not stationary, you use the ARIMA model, make the data stationary and supply the value of D. So ARMA, ARIMA behave exactly in the same way except for the D parameter. Is this clear to everyone? So we have identified D, how to check D. Now the question is how to find P, how to find Q. So this is done by plotting a graph known as Parallelogram. Okay. Dendrogram नाम सुना है? So don't confuse dendrogram and parallelogram. Dendrogram comes in clustering. Hierarchical clustering में those vertical lines to determine clusters. Okay. This is parallelogram to determine optimum P and Q values. Now, how does it work? Now, I do not know how many lags are going to be significant. Okay? It can be 1 also, it can be 50 also. I do not know how much into the past I have to go. So, assuming that I'm taking the lags as 50. Okay? I can take any number, 50, 60, 40, 10, jo bhi hai. So, if I take 50 lags, how many significant lags I have in this 50? That is what I have to determine. So that is done by parallelogram. Now what happens in a parallelogram? We have along the x-axis, we have the lags. Along the y-axis, we have the correlation. Then this is +1. And we have -1. Now, in hypothesis testing, you must have used the significance level. Yes. Yeah. Significance level, confidence level, significance level. अरे ऐसे कैसे? You are testing a hypothesis at 95% confidence. Sorry?
Is there any other term used for that?
It is called significance level or confidence interval. Confidence interval, confidence level. Hypothesis testing में क्या क्या किया था? Let's start from that.
Level of significance.
उसका what is the meaning of that? Tell me.
For example, if someone claims that my hypothesis is 95% accurate, then we will cross-validate it. We will ideally challenge the.
तो वो 95% क्या है? Significance level. Okay, that 95% is the significance level. If you say that my new car gives me a mileage of 25, ठीक है? तो वो 25 kilometers per hour is how confident are you? It is also called as confidence interval. वो नाम सुना है? Confidence interval. Same thing, significance level, confidence interval. Okay. So how confident are you? 95% confident, 99% confident, 90% confident, 97.5, whatever number you want. So we are going to use the same technique in parallelogram also, that at a certain confidence level, okay, we are finding the number of significant lags. Now, assuming that I'm taking the default value as 95%. Okay. Now, what is the Z score at 95%? 95% क्या है? 0.9500. Correct? What is the Z score at 95%? it is 1.645. Okay, this is not, I'm not making this up, this is from the table. हमने किया था class पे. ठीक है, 97.5 means 1.96, one tail, two tail, all these things. So this is going to be the Z score. This is going to be the Z score. Now, in the chapter on estimation, if you remember, estimation pay, we calculated something called as standard error. Yeah? What is standard error? Sigma upon root n. Okay, deviation by square root of total number of observations. So here, in a correlogram, the sigma value is the Z score and total number of observation is the test train data. So whatever value comes here, I'm going to calculate that as the something called an error band. So I'm going to calculate the error band. Estimation में याद है हमने क्या किया था? Did we do the chapter on estimation? Point estimation and range estimation. So range estimation क्या है? First we calculate the base value and then plus minus. Correct?
Yes.
So here this is the base value, which is 1.645, and then we calculate what is the plus value and what is the minus value. Okay, and now in this, we are going to plot two different types of graphs. One is for AR and one is for MA. So there will be two correlograms, one for AR, one for MA. So assuming that I have 50 lags, so here I'll have lag number 1. Here I'll have lag number 50. Now it is going to plot for each lag what is the correlation. So I'll have the correlation something like this. Graph. Let me remove the other things so that we can focus just on this chart. Okay, so let us say that this is the AR correlogram. Now for 50 lags, I have plotted the correlation. Now what is the AR going to give me? It is going to give me the value for P. Now how do I determine the value for P? That is, how many significant lags are there? This is what we want, isn't it? Now, to determine that, you check how many lines are crossing this error band. So this is the error band. So the general method that we use is find out how many times the correlation is crossing the error band. So this is crossing. Okay, but can we take this as a significant one? No, because it is a correlation with itself. So here the value of P is going to be 0. Okay, minimum value 0 because there are no correlation, there are no significant lines. Clear? Then what else is crossing? So here we have one. So that means I have one significant lag, and that lag number is, let's assume this is 10. Okay, so we are not worried about the lag number. We want significant lags. Okay, so here is one lag. Then we have this value which is crossing the error band. So 2. Now, if you look at all these things, they are within the band. So that means not significant. And then we have this one. So total, we have how many significant lags? 4 significant lags. What are the values for P? It can take 0 or 1 or 2 or 3. So my AR model is going to be 0 or 1 or 2 or 3. Clear hai ye? Similarly, I will have a graph for moving average. Identical. And from there, I can determine what is the MA. So it will have something similar, 0, 1, let's say there are 5. So I'll have 0 to 5. Let's assume this is the set of values. Now comes the model building part. So which combination of P and which combination of Q will give me the best result? तो यहाँ पे कितना है 4, यहाँ पे कितना है 6. So 4 into 6, how many models? 24 models. Okay, so how will my model look like? P and Q. So ARMA, P and Q. What will be the combination? 0, 0, 0, 1, 0, 2 till 0, 6. Then 1, 0, 1, 1, 1, 2 till 1, 6. Then 2, 0, 2, 1 till 2, 6. So build the model and check which model has the least error. So the error is determined using the AIC or the BIC. AIC क्या है? कहाँ पे हमने देखा था AIC? दोनों में नहीं है. And Bayesian information criteria. These are model evaluation parameters. Lower the value, better is the model. So let us assume that I'm getting my best performance when the value of P is 1 and the value of Q is 2. So can you tell me what is my ARMA model? What model is this? This is going to be ARMA 1,2 model. Because ARMA is a PQ model. So this is ARMA 1,2 model. What is 1? What is it? Number of significant lags for autocorrelation. What is 2? Moving average. Is this clear to everyone? ARIMA is identical, no change. Okay? But the only difference between ARMA and ARIMA is the D value. ARMA is PQ. ARIMA is PDQ. Other things are identical. You will check the data for stationary. If it is stationary, then D will be 0. So that means you are doing an ARMA model. If the data is not stationary, you will difference the data. If it is a first level difference, then D becomes 1. Then you will do an ARIMA model. How do you check the value for P and Q? Plot the data using the correlograms. Find out the significance for P and Q. Is this clear to everyone?
To find out the P and Q in the base value. जो P and Q जो value search कर रहे हैं, तो base नहीं है.
Best. This is some kind of a cross validation. वो आपको खुद करना है. So वो जो the graph that we make to determine the P and Q value, in Python we call that as ACF graph or ACF plot. वो correlogram जो बनता है, that is called ACF plot and PACF plot. ACF stands for autocorrelation function. Which is nothing but the moving average, whereas PACF is known as partial auto correlation function. Which is going to give you the value for P, and ACF plot gives you the value for Q. Okay, so we have libraries to plot the ACF and PACF. So PACF gives the value for P, which is the auto regression. ACF gives you the value for moving average, which is Q. D is determined by the graph where you are checking trends, and accordingly we will build the ARMA or ARIMA. Okay, clear? Now there is one last term. Okay, one of the assumptions of linear regression क्या है? With respect to the errors?
Relation चाहिए उसमें. Relation चाहिए.
Error में. Have a normal distribution. Again, we plot this to check whether the errors have a normal distribution or not. So we are going to do the exact same thing for time series also. Whether for the given model, the errors exhibit normal distribution or not. And that is done by using a test called White's test. And it is also known as the junk box test. ये lunch box नहीं है, it is called junk box. LJUNG. Okay, we can also, this is also known as the box Pierce. So box Pierce using the junk box test. So from a time series perspective, we call this as white noise. Checking for white noise. So there should not be any white noise in the data. Okay, so what happens in a junk box test is you take the data, you do the predictions, you take the errors, and then check whether the errors are normally distributed or not. So this returns a p-value. So the check is if the value of p is greater than 0.05, then it is a good model. Or if the value is less than 0.05, then it is a bad model. Okay, so that completes the theory. समझ में आ रहा? So if you have to look at the model building process, so let me see how much you have understood. First step क्या होना चाहिए? First we have data. Second, अभी मान लो इस डेटा पे I have 10 columns. What kind of an analysis is this time series? नहीं वो ठीक है, but what type of an analysis? Univariate or multivariate? Univariate. So univariate analysis के लिए क्या करना है डेटा के साथ? अगर 10 columns है,
The most significant ones.
we have to take the value that we want to forecast. ठीक है, बाकी नहीं चाहिए. So we have to first extract the, I won't say significant, you can take the right column, I can say. Okay, so this becomes your data. Okay, don't take the entire data. You have to take the relevant data. So you can take not right, you can say relevant column. So relevant column mil gaya. So this becomes my data. Next. Then plot. Plot will give you what?
Whether it is seasonal, whether it is trend, whether it is seasonal, or whether it is linear.
So plotting will give you two information. Number one, it will give you the components. What are the 4 components? And random, correct. So plotting will give us these 4 components, and it will also tell us what? Trend aa gaya na? Yes,
If the data is normally distributed.
normal distribution?
Stationary.
Stationary. Stability nahi. Stationary. Okay. And then stationary. ठीक है. Step number 4.
If the data is not stationary.
Okay.
then
If
you have to station.
very good. So stationarity, yes, no. So if it is no, then
ADF.
no, this is ADF. So ADF will give yes or no. ठीक है. तो ADF अगर no दे रहा है तो difference. Okay. So you make it stationary. Sorry, you make so difference data. Then the difference data has to be checked again for stationarity. So this cycle will repeat till the data becomes stationary. Usually in the first difference itself, data becomes stationary. Okay, so here D becomes 1. If it is already stationary, then model building. Which model is this? ARMA. Either
If the data is stationary.
if it is not stationary, ARIMA. Okay. So in between the before the plotting, you can also do other models. क्या क्या है वो? Before you plot, I can do moving average. Autocorrelation is not a model. It is just to check the correlation. उसमें prediction नहीं होता. Moving average में I can do the prediction. What were those 3 smoothing techniques?
PNU, train and sequence.
Simple, double,
Simple, double, and
and
triple. So simple, double, and triple. These are also models. Okay. But these are very basic models. इससे भी आप forecast कर सकते हैं. So when is moving average used? When your data need not have any trend or seasonality. Okay, no trend, no seasonality. Simple, no trend, seasonality. Okay, so these are similar. Only thing is in S you have an alpha factor. Okay, so that we can determine using the cross validation. Double में क्या है? Trend है, no seasonality. So trend is there, no seasonality. Triple में both trend is there, both trend and seasonality are present. Okay. So if you are happy with the result, you can stop here. If you are not happy, then go for a more advanced model, which is called ARMA and ARIMA. Usse bhi khush nahi ho, then you can go for other technique, which is called S-ARIMA, which is called seasonal ARIMA model. When your data has no trend, but only seasonality. I think I mentioned this term, S-ARIMA. So now you know. You know what is ARIMA? ARMA. Now you have S-ARIMA, where data has no trend, only seasonality. Then I should use S-ARIMA. If you are not happy with SARIMA, there is another extension to SARIMA that is called as SARIMAX. So SARIMAX is a model where I can use a data that does not have trend but seasonality and also other features. That is, you are taking a multivariate into account. बहुत हो गया ना?
Yes, sir.
तो वेक्टर वाला भी
Vector is VAR, वो नहीं है. Do this. If you're still sane, then we'll do the rest. This takes time to understand. Not the usual techniques.
सर ये जो आपने टाइम से बोला, ये प्रोडक्शन पे इम्प्लीमेंटेशन कर सकते हैं.
Of course.
क्योंकि सेकंड में फर्स्ट में यही काम कर रहा है.
One.
मेरा एक फ्रेंड है कभी तो देख रहा था एक क्या होता है तो वो कर रहा है.
Okay, online, who all we have? Ankita, any questions? Okay, so we'll end the session here today and let's meet next week for the hands-on.